it's no secret that Jamaica has gone through a major crisis. Hurricane Melissa, Category 5 hurricane. It devastated, a huge part of the island, especially the west side. And,
Hmm.
there's a lot of things that have been coming out about different quotes on the damage. And then also a lot of things about all these different insurance packages, and there's all of these different names being thrown around, and it's very confusing. Or I've been, I guess, quite confused by it. It's not something that I think most people, would know. Could you maybe give some more clarity about that, and even just try to break it down a bit more simple for us, like what are these different packages, how does this insurance work, and things like that?
Right. So, you know, let's start from the top. So, Jamaica has what's called a multi layered disaster risk financing framework. So, that is intended to um, address different levels of severity of natural disasters and any kind of disaster. So, the premise behind it is that you have five different layers. At the top is the World Bank catastrophe bond, which I'm sure most persons are um, the most familiar with. And
Hmm.
then after that, the second layer is from the Caribbean Catastrophe Risk Insurance Facility. We have two insurance policies with them: an excess rainfall policy, which is for water damage, and a tropical cyclone policy, which is for wind damage. Below that, you have a contingent, what's called a contingent credit claim from the Inter American Development Bank, as well as from the World Bank. So that, as the name suggests, is contingent on a disaster happening, and then the resources are released. Below that, you have what is now called your disaster fund. So your national natural disaster reserve fund. That is now the fund for all the proceeds of our insurance. They flow into that fund. And below that, you have your contingencies fund and your regular budgetary allocation. So you have regular budgetary allocations or reallocations at the bottom. Now, how they're arranged in exactly that order is that for those instruments that are at the top, they are intended to deal with disasters that are very highly severe but less frequent. So, like a Category 5 hurricane, you don't get a Category 5 every year, at least you hope you don't. You hope you will not. Um,
Facts.
but it's so severe that it happens so infrequently. I think since this data has been measured since 1850, we have had maybe, I think, 12 or so hurricanes Category 5 be making landfall, just to show how rare it is. So in those extreme scenarios, at the top, it deals with high severity, high impact weather events that are less frequent. At the bottom, those deal with the opposite. Those are less severe and more frequent. So, like for example, your regular rainfall, your seasonal rainfall that causes the occasional
Hmm.
flooding, and landslides and your tropical depressions and so on. Those are less severe, but they happen more frequently. So the idea is that the government of Jamaica retains its capacity, its risk. It takes responsibility for absorbing that risk through its own allocations. Whereas our insurance instruments transfer the risk to the international capital markets at the higher end. So the cap bond, for example, it is invested in by global institutional investors. I think there are 15 of them. Most of them are in Europe and North America because the bond itself, was listed on the Hong Kong Stock Exchange and it
Hmm.
was arranged by the World Bank. So Jamaica pays premiums to the World Bank, they keep it, and the investors, their principal, goes to the World Bank. And now, in the event that it is triggered, meaning that the parameters are set, and I'll go into what that means a little later. The parameters, if they are breached, or then the instrument becomes activated. As a result, the uh, payout is then made. So the investors lose that principal amount, which is the 150 million US dollars or 24 billion Jamaican. They lose that completely, right? Whereas
Mm.
if we have a scenario where the event does not trigger, as it didn't for the
Hmm.
first 3 years when the
Hmm.
catastrophe bond was first implemented in 2021 and it expired in 2024, then what happens is that those premiums are now remitted to to the global investors in the form of bond coupons. And now that is basically their return for having invested in that bond.
So question, how does the cat bond differ from like a regular a bond that, you know, us as investors know, that some may be listed and so on, some may not be listed. How does it differ?
So, despite it being a bond, it's not debt. So it's not a debt instrument. Jamaica incurs no debt. It's more of an insurance instrument. The bond terminology is just for convenience, right?
Okay.
Yeah, it doesn't operate like the traditional bond where, it matures and then you get back your principal and you get your coupon payments.
Interest.
It right. It only it has to satisfy the condition for that to happen, right? So it's also differs from traditional insurance. So as an insurance instrument, it is not like traditional indemnity insurance, where anybody who's familiar with, for example, you meet in an accident or suffer some sustained loss or damage or something, and then you now need to have the claims adjusters going into the field and then assessing the damage. If it's property damage or car damage, they assess everything and then they give you an estimate and say that this is what we estimate the damage to be. The evaluators do that and what have you, and then they take months to give you your payout. If you hope it's months, but what this is now, it's pre-arranged. So the principal amount, being 150 million US dollars, is preset, right? So if it's triggered, you get the money. That's it. If not, the money stays right there. It's called parametric insurance. The parameters in this instance are the wind speeds, more precisely, the intensity of the storm as measured by centralized air pressure, as well as the trajectory that it takes. So Jamaica has a series of grids overlaying the island. 19 of them. 3 or 4 of them were breached with Hurricane Melissa, and each grid has an associated air pressure where the storm, as it
Preston, I
passes,
don't know if you can pull it up for the audience
Yes,
just to see.
trying to.
Okay, but yeah, you can continue, Keenan.
right? So as the storm passes through, it needs to breach the grid by having a pressure that is either at or below that threshold. So in Hurricane Melissa's case, the pressure was 892 millibars. It was so low that it was lower than the lowest possible threshold, which I believe was 920. So there was no doubt that the catastrophe bond would have been triggered in that instance. Beryl did not trigger because while Beryl had, the path, the intensity was slightly above the threshold required to trigger the cat bond. And had a cat ban in the past, then Ivan would have triggered it with a 100% payout. Dean would have triggered it with a 92% payout, and Gilbert would have triggered it with a 70% payout. So, we've had events that would have triggered it, but the cat ban didn't exist back then. So this now differs in the sense that once it triggers, you get the money. There's no question about it. The only thing is that it has to be verified by a third party, which had been done last week, which confirmed that it is indeed 100%. Because, it's dependent on the number of grids that are breached, as well as, the intensity of the storm. Exactly. So we see the figure right there. So, through some of those grids, I think it breached grids 3, 5, 6, 11. So based on where the eye passed out. So 11, 5, 6. And so you calculate payout after that, dependent on what the severity of the storm is. You could get a lesser payout, you could get 90 something, 80 something. We needed just the independent risk modelers to determine that. But there was really no doubt once we saw how intense it was. We're talking about the joint strongest hurricane on record, in 90 years,